My name is Mike Sullivan. I'm a former IRS agent and teaching instructor with the IRS. I've worked about 10,000 cases in my life. I'm a national resolution expert while at IRS. I worked the offers and denied offers, and actually, as revenue officers advanced and they were able to progress to work offers, I was a teaching instructor for them. So, whatever I tell you or any questions you want to ask me in the future, I will give you the spot on truth about the offer and compromise. Today, I want to tell you very simply it's a 30,000 foot overview. I don't need charts, I don't need all of this. I'm just going to tell you what the formula is so you get a really good idea. First, you should know that IRS has a pre qualifier tool. If you go to irs.gov, look at the pre qualifier tool, you will simply find out there you can walk through that pre qualifier tool to see if you're eligible. Second, the next thing I would do is I would send your package to somebody to review. Pay the money, let somebody look at it. If you don't want to have them work it, you want to work it, have a specialist review it. Offers and compromise are very complicated, and to get them through, it's like it's surgical. When I accepted and rejected, few do-it-yourselfers got their offers through because they require so many little pieces to them. Knowing the documentation, knowing the formula, knowing being current, making sure that all your estimate payments were made. There's a lot to an offer. There just is. As you look at the forms, the forms are kind of overwhelming, and when you put it through, the reason IRS is so picky is if your offer goes through, it becomes public information. After 18 months at 6 service centers, they send them into a special room. They're locked, and you can make an appointment and go look at them. But let me get to the formula so you understand the formula itself. There are two there are two aspects of an offer and compromise, and that's your assets and your income. Because at the end of the day, that's the money part. IRS doesn't care so much about all the debt, liabilities, credit cards. IRS is only interested in two things. A, what are your assets? Let me look at the assets. IRS allows you to discount your home 20%. If not, IRS wants you to go ahead and add the values of everything you have. Your bank, your car, IRA, pension, anything in business, anything of value. If that comes up to $100,000, that's the base offer and compromise they're going to accept. They are not going to accept any less. I have people call me all the time. Says, listen, I want to settle my debt. I says, if you were to liquidate everything you had today, what would you bring me tomorrow? Well, if it's more than the tax, IRS isn't going to accept it. Why? Because they have a federal tax lien on there. Don't submit an offer no matter what anyone says, no matter what any salesman tries to tell you. IRS will not accept your offer because your assets exceed the debt. The second part of this is your income. IRS wants to know what your income is. Now, this is very important to understand. IRS has what's called a national standard on expenses. So let's say you make $5,000 a month. IRS has a chart. You go to the IRS national standards, and they have them for food and clothing, housing and utilities. They have them for car payment and operating cost of cars. IRS will say, this is the only amount of money we're going to give you for those four items. We're not going to allow you anything else. So you're going to put your income down. IRS is going to get a fine pen and pencil to it and say, no, but we don't allow those. For instance, I live in Fort Lauderdale. So I would go to the IRS national standards. Just Google it, IRS national standards, housing and utilities. Okay. You hit Florida, and then you put the county you're in. I'm in Broward. It'll tell you how much they are going to allow you in that particular city or county to live on. So if IRS allows me $5,000 a month to live on, and I'm making $6,000 a month to live on, I have $1,000 left over at the end of the month. So what does IRS do with that $1,000 left over a month? They multiply it by the life of the statute you have left. So if you have 5 years left, that's going to be a 60 factor. 1,000 times 60 months in 5 years. Then you simply go ahead and look at your asset base of $100,000 worth of assets, the $1,000 left over at the end of the month times 5 years. Okay, then that offer is added together. So they will take the 100,000 plus the $60,000, and your base offer is $160,000. So at the end of the day, a person who's really skilled in that can help you refine your financial statement so they can make changes on the statement that will go ahead and allow you a better standing with the IRS. If I look at a financial statement from a client who walks in today, that's not the financial statement I will turn into Internal Revenue Service. There's things you can legally do to help change that financial statement so you can get your offer accepted. So anyway, if you have questions or comments, please let me know. I try to pull back the curtain and show you what an IRS agent will look like. I want you to know a couple other things. IRS will pull a credit report on you, and they will pull up an accurate search engine. They'll use the accurate search engine to find out different assets that you have in your life. IRS goes to great lengths to make sure your financial statement is correct. If you like the information I'm giving you, I'd love for you to subscribe. That's important to me, or like. And if you want, leave a comment. If you said, well, I don't understand this, I will probably read your comment and make a YouTube. Most of my YouTubes are left on comments you made. Thank you very much for listening. Once again, subscribe if you would, or like. Thank you.